All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thanks so much for taking time out of your day to join me this morning and every morning, 9 a.m. Eastern Standard Time. It is Thursday, October 20th, 2022. Let's go ahead and get started on the day. Dow futures, pretty choppy. The futures market were choppy all night and all morning. We got as high on S&P future, Dow futures as I think about 150 points. We are now flat green. Nasdaq down 0.52%, S&P down quarter point. Russell 2000 down 0.17%, but we're starting to bounce a little bit. Really, the big headline this morning was UK Prime Minister Truss has resigned her post after, I believe, 7 weeks of being a prime minister. There will be a vote apparently next week or shortly soon. Liz Truss is her name. Again, I saw that this morning on Bloomberg. Uh, the British pound, again, I'm not one to talk about British politics in general, but again, it matters, at least now, at short term. You could see now we're at 112.57 on the pound dollar. Just got some headlines here from Bloomberg. U.S. natural gas futures lowest since March. That's another thing that we look at in terms of inflation. Has inflation peaked? I was reading an article on Bloomberg this morning that, on investing.com, regarding natural gas falling because of a possible warmer than expected winter. Wouldn't that hurt the actual commodities market that deal with energy? So again, that's something else we can kind of hang our hat on. At least inflation in terms of commodities have peaked or is peaking. One of the two. It really is dependent on the view. There goes my inbox with all the headlines. Bear with me, guys. So again, you could see the spike on the pound dollar since the resignation of Prime Minister Truss. You can see it kind of pared back those gains a little bit. Now we're at 112.55, but it is green pound dollar. Again, we do talk about Forex somewhat. Let's go to crude oil. Crude oil is up this morning 1.16%. Let's chart it quickly as we go around the horn. You can see that it is pulling back a little bit, obviously with the futures note regarding natural gas futures being down, lowest point since March. Keep in mind that I believe it was February that the Russian invasion of Ukraine happened, or we started getting this big spikes in commodity prices. All this stuff is happening, guys. Crude oil is higher. You have interest rates continuing to climb to multi-decade highs. We'll chart those together here in a second. And the S&P futures are flat. So if anything, this is telling me that you're starting to get a decouple from rates and the stock market, that you're getting to the point that this looks to me some kind of bottoming. I know it sounds crazy, but we've had every excuse in the world to sell this off. Now, granted, we could still. Maybe we get some kind of weird surprise on OPEX tomorrow, sure. But again, I'm still bullish here, at least until 38.20. Let's go to gasoline futures, up 0.65%. In terms of crude oil, the chart, again, I still like energy stocks. I haven't bought anything. I'll buy some SPY-G today like I do on Thursday. But again, you can see we're just right at the 20-day. The 20-day moving average on the daily. Again, if you're above it, that tends to be very bullish. If you're below, it tends to be pretty bearish. But again, you can see here that we're just back at that yellow line of pre-COVID highs. That's where we are. No, excuse me, 2021 November highs is where we are before the spike. And it seems like this kind of is the reversion of the mean effect, where we may just hang around between 85 and 75 for a little bit. And if the weather is warmer in the winter, then you'll see crude oil continuing to be under pressure. Doesn't mean energy stocks are not worth it, but again, you could see that crude oil at least is under pressure, at least on the daily. You went from 130 to 85. That's a bigger drop than the stock market, keep in mind. Natural gas, again, we talked about lowest levels. Gold futures up 0.12%, 1636 an ounce. They're under pressure as well. Again, not the best hedge in the world, as we have talked about. If you guys remember this 200-day moving, 200 MA here, 1690. So gold is below it, but yet stock market isn't. The S&P 1636. What is your next level for gold? It could be down to around 1514. Again, I never thought gold was the best investment at all, but some people love it, and people have always said it's never going to go to zero. So there you go. Copper futures up 1.88%. Let's see here. Euro dollar up 28 pips, 98. 149.93 for the dollar yen. That hit 150 this morning or overnight. pound dollar. Again, we talked about that, up 42 pips. Bitcoin kind of holding pat. Let's do something with Bitcoin. I had this discussion yesterday with my barber. He asked me, "What do you think about crypto? Is crypto dead?" And I said, "Absolutely not. I don't think crypto is dead at all." We're going to go ahead and kind of go back a little bit. So let's take a look at this. This was the peak back in 2018, if you guys remember, 2017, 2018, when we got to around what, 20,000. That was the peak of it. And everyone, when we got back to 3,000, it's dead, it's dead. And that's a pretty big move, obviously. Then we had the pop here to 14,452. And then we got to this kind of double top formation right near 70,000, at least on the future side on Bitcoin. But look at this. Again, we're still kind of hovering around the levels that were the previous highs of the cycle. So to me, that looks like support. Mind you, again, if we break below, the 18.3, that was that log charts setup support. We talked about that on Bloomberg. And again, I like Bitcoin. I do like it long term. I still own it. So again, I'm starting to see that resistance that we had in 2018, late 2018, early 2017, that peak, that seems to be that new support here so far. Because again, name any excuse you got. You got the interest rates. You have risk selling off of risk assets. You have the deterioration, at least in the macro sense. The slowdown, and Bitcoin again. And I'm not saying it hasn't fallen, obviously, but still kind of holding around that 18.3 level. Now we're at 19,000. That seems to be that range, 19 to 20, where we were in late 2017 to early 2018. So again, keep that in the back of your head. Would you want to go ahead and test the depths of the water with 2 feet? I would not. But again, do your chart work, see what you think in terms of Bitcoin. Talk about high beta, talk about high reward. That's probably the one that's going to be the highest reward, especially if you're looking long term, if Bitcoin does bounce. Again, we don't know, but again, I'm a holder of Bitcoin. And who knows? Let's see how much we can go down the rabbit hole. Maybe if we get above 22,000, that may give us a little bit of a shot. Maybe not to get the exact bottom, but I still dollar cost average Bitcoin every week personally. Not tons, but a little bit. Let's go and answer some questions. Earnings and labor market holding up well so far. Tesla did miss revenue. So again, let's go Tesla real quick, and then I'm going to answer William's question. Tesla on the hourly, you could see this drop from 222 to 209. I had Tesla calls yesterday with the team. We closed that when we got a little bit of a fall down on NQ. We closed it for about a 5% gain, pretty much flat-ish on the signal for premium and masterclass. And then we had the earnings report. Again, the earnings report was fine, except for the revenue did miss. Elon was on the conference call. He said a couple of quips here and there about self-driving. He talked about robo-taxi. The whole information is on their site if you want to go and take a look. If I see any more details on Tesla, I will make sure to tweet it out. But again, most of the conference call stuff was there. The big one I saw out of Elon that he said was that he believes that his company is going to be worth more than Apple and Saudi Aramco, two of the largest companies on planet Earth in terms of market capitalization combined. So very bullish on the future of Tesla. Keep in mind, they have over 60% market cap. They really don't advertise. We still see some demand, but obviously revenues being lower. Again, Tesla is a company that does benefit from alternative energy legislation or politicians that way. So again, if you start get, but again, we all know Elon Musk is a conservative, at least with his social agenda or social setting as well. If you read his Twitter, and he did buy Twitter, so that cost some Tesla shares of Tesla. Excuse me. So again, a lot of moving factors with Tesla. I think Tesla is a great company for the future. I do not own a Tesla. I do own Tesla shares, obviously with SPY and the stock itself. But keep that in mind that this one is a volatile one, and this is high beta. So if you're really starting to bottom fish here, I mean 200 seems to be a very, very strong support. So again, if you are looking to possibly nibble a little bit on some stocks, Tesla would not be a horrible name here. You're getting the discount here, but again, in terms of PE, it is relatively expensive. So again, just throw in some stuff out there. Again, at the end, the decision is yours. Am I going to go and run out buy Tesla today? I already have Tesla exposure, but again, you could do a lot worse out there. That's for sure. Let's see earnings. We talked about that Tesla earnings. Earnings with AT&T did beat. Procter & Gamble did beat as well. Alcoa did miss. So again, some hit or miss here and there. Banks were pretty decent. The tech comes, I believe, next week, William. So we'll go ahead and see deeper into those earnings once we get it in. Again, Apple being a big one, Microsoft for enterprise spending, Amazon for the consumer. I mean, Google for business advertising. Those names, I mean, they represent such a big part of the business and economic cycle that we need to hear what they have to say, and especially their forecasts. I don't expect a forecast from Apple, but again, a forecast from Microsoft would be interesting, at least with an enterprise spending front, because if business starts slowing their spending, that means they're going to slow their hiring, and then we'll start seeing at least inflation ease up. Again, inflation is going to stay around, guys, as long as people have work. They're going to still consume. That's just the fact. If you have a job, you're still going to pay your bills. You're still going to go do stuff. If you have a nice paying job, and that's what inflation is. Too many dollars chasing too few goods, and goods inflation is flat, but at least service inflation is up. So we need that to come down. I hate to say it. I know I beat it like a drum sometimes, that we need a softer labor market to really kill inflation. The best way to kill inflation is really a recession. Technically, we are in one, but the labor market doesn't reflect that. So to each his own. Thoughts on overall considering everyone expected those numbers, the shoes to fall? To me, William, what I think, and again, I'm here every day talking about what I think. I still think we hit a bottom. I mean, we have every excuse to fall. I mean, I'm trying to go down the list. What are we missing? A hawkish Fed. We have rates at multi-decade highs. Other than bankruptcies, I'm trying to think of something that we're missing. I mean, I don't hear any kind of deterioration in terms of credit yet. Yes, it is more expensive to get credit, but there's liquidity out there. Banks have said that. They have loans in their balance sheet. They're still making loans. Yes, you're getting some asset drop in terms of the asset managers like a Blackstone. They reported earnings as well. But I mean, if we look at it at the big picture, it seems that we have priced in pretty much everything. And, you have bonds and stocks fall, the worst since I believe 1970. So again, I mean, unless we are planning to stay in cash for the rest of the year or the rest of the next year, I think we're starting to price in 2023 moving forward. So, me, I'm always long. People always say I'm perma bull, and that's fine. But again, I'm betting on America. I think America is still the best economy on planet Earth. And all this is happening overseas with UK, China, and Japan being at 150. I mean, it just benefits the US at the end of the day, the reserve currency. Where else are you going to put your money? Do you want to buy British stocks now? Do you want to buy French stocks? Do you want to buy, Swiss stocks? How about German stocks? Do you want to buy Chinese stocks now? I think still the best game in town is still the United States. And we're the beneficiary of that as traders and investors. Good morning to you, Whale. Should we expect an even stronger dollar after the Fed meeting? The Fed meeting will be next year. The expectation of the dollar is that we already know we're priced in for 75 basis. So unless we get some kind of upside surprise, maybe 100 basis points, then I think the dollar still kind of stays where it is. I mean, unless we get some really, really strange, political turmoil overseas. Obviously, we're seeing that in the UK. The dollar is still very, very elevated. You see 114.77 we tagged. We stretch this out to a multi-decade. 121 is still the 2001, 2002 high. We hit a key Fibonacci retracement level of 161, extension level of the 114.76 level. Yet we rejected that. I would say that if that breaks, 121 is coming, but it's rejecting now. So again, have we priced in everything, Whale? So that's the key. If we get to below 110 on the dollar, that's when things get a little better, at least for the equity market front and possibly for the bond market front. I think that we have already topped out on the dollar. I mean, at 114.76, you see pretty much to the wick. And I did the Fibonacci retracements here from the bottom, the most recent bottom, which was in 2021. Again, this is a multi-weekly, multi-decade chart with weekly candles. And good morning, William. Rude of me. No, not rude at all. It's early in the morning. Get your coffee. No worries. Again, a lot of this backdrop, guys, really gives me at least some solace that I think I'm not alone in this thinking that this seems kind of bottomish. I mean, we're checking a lot of check marks here. I'm seeing a lot of YouTube videos on my feed that the world is over. This is the same stuff I saw in March 2020 when everyone said the world was over. And we had lockdowns then. We don't have lockdowns now. At least people are free to leave their houses now. But I mean, when you start getting peak fear, you start pricing in peak fear. And I tweeted that last week, where any hint of good news or any bit of some positive news, we're going to soar really quickly, and it's going to be some short squeeze ignition. I'm still with the camp 3820. We'll get there. We'll roll over after OPEX once we tag that. we'll retest 36.39, which is your June lows, and then we'll bounce. And again, the only reason I say that is because seasonality and November coming up. We're starting to get to the back half of October. And again, we have one more little dip in terms of seasonality wise. If we follow this setup, let's go ahead and show you guys one more time. Here you go. And you could see it, midterm election seasonality. Midterm election is in a couple of weeks. If there's a change in Congress, maybe that's bullish short term. We don't know. Changes usually happen in Congress. That's just the way it is, especially with an incumbent president the first 2 years. The last one not to have a change in terms of a change of party in Congress, at least one of the houses, was George W. Bush post 9/11 in 2001, when his approval rating was in the 80s. So again, the expectation is that you're going to get a change in Congress. And again, the best return, stock market return, I will get you the data when I find it, that I read was that a mixed Congress is a stronger Congress for the stock market, not having just one running it, at least the data standpoint. I'll find that information for you. I know it offhand. But again, you have that election November. If you get, a change in Congress, that is surely to be some bullish catalyst, especially since the Republicans and conservatives are more in line with Wall Street thinking, a little more in terms of supply side economics, maybe some tax cuts to stimulate some of the economy if we get to the point where we're too low. Many things, speculation from there. But again, it's going to be, an interesting couple of weeks. So we need to keep our eyes open. Technically speaking, 3,700 has held. We wicked below that. So again, tight stop. Remember when I said 3,700 being that stop, we got as high as 3,771. So if you did go long and you took some profits, cool. If you didn't, you got stopped out at 3,700, pretty much where we are now, 3,706. Pretty much choppy action. I think we get 38.20 by tomorrow. Then we'll just roll over and get to 36.39. Not in one shot, but slowly but surely. Maybe one more pop in the dollar to 114.77. Kind of makes sense here. But again, I could see a downward trend, at least in the dollar short term. Tesla's starting to peak up a little bit here. Let's see if Tesla can make up the losses from this earnings, get back to around 220. That'll help the NASDAQ as well, as it is underperforming the market. Thank you, Tesla. Have a great rest of your morning. That was a mouthful, tons to speak of. And we'll catch you tomorrow for the morning note OPEX edition. Let's see if we get some volatility this morning. IBM on CNBC up 3.66% pre-market. Have a great rest of your morning. Cheers.